we have a Windsor expert, Rhys. He's going to tell us all about our favorite economical market, Windsor.
Just built a $1.5 billion freeway. We're in the process of building a $4.1 billion international bridge. Our Stellantis plant is having a $2 billion makeover, which includes adding a third shift. And as soon as you add a third shift to 2,200 people, you got to understand, and most Windsorites don't even truly understand this. It's not just about the third shift in the Stellantis plant. It's the third shift that you now have to add to all the tool, die, and mold companies that support the Stellantis plant, and they're all local.
So in a nutshell, we've got Windsor as primed position for some massive expansion for any investors that are, thinking of property and conversions and things like that. Hello YouTube, welcome to the Canadian Real Estate Channel. I'm Andrew, I'm guest hosting again, and we have a Windsor expert, Rhys. He's going to tell us all about our favorite economical market, Windsor. It's been hot for several years now. And I just wanted to start by mentioning, by the way, if you like what you're seeing, remember to subscribe, like, share, comment. We want to hear how you like what we have to say. Rhys will definitely want to give some input and answer all your questions after, so please don't hesitate. So Rhys, welcome to the channel. Thanks for coming.
Thank you. Yeah, and we were just talking right before the thing, me and Andrew and our producer Peter, but I got to make sure I'm properly qualified as a real estate agent.
Yes,
there you go.
Lien, the Realtor lien.
There you go. That's how you know I sell a lot of places, is the lien. Yeah, there you go. Put that on your business card, bud. Yeah.
Amazing. So I was going to give you a full introduction, but I believe you have your team, you're leader of a team in Windsor. So you've got a bit of introduction to that team. So I'll just let you start that up if we can pull up the presentation.
Yeah, which is something I don't do. This is Peter. There he is, right on point.
Here he is.
We went with pretty neutral colors and everything.
I like it, with a little bit of red for impact.
When you're doing a fix and flip, that is the color of the wall you want to paint.
Right? Agreeable gray.
Neutral colors. So yes, investing in Windsor Essex. For those that aren't familiar, Windsor's like the big city, including a patchwork of bedroom communities at the sort of western side of the county, bordering Detroit and by default the United States. And then there's a couple of smaller towns on the sort of opposite side of the county, like Leamington, which is extremely well known for having more greenhouses than anybody per acre in the world, except for a place in China. Lovely little town, Kingsville, very historical. Amherstburg, very cute town, historical. And again, I find a lot of our out-of-town investors don't realize this, but our county has 4 of the safest 10 cities and towns in Canada. And it throws people off because they're like, well, you're right next to Detroit. It's like different country, different city, different policies, Rules. So yeah, very safe, robust, and now growing, exploding growth, which we can get into in a bit. You're going to continually see the banner at the bottom right. If you're wondering what that little gold coin is, we were flattered to be one of the top 100 teams in Canada. I don't know if we are for 2021 or not. I don't know if the pandemic's held them up, but that's from Rep Magazine, which is sort of the standard that we all try to achieve. So we were very happy about hitting that standard after being around for about a decade.
Excellent.
Yeah, it's not easy because we have much lower, they do it by sales volume, and we're much lower sales volumes per sale than, say, Toronto, right? So it's harder to get for the smaller cities.
Well, so even more impact then, yeah.
Yeah, oh yeah, you gotta sell a lot more to get on there from Windsor. So this is most of the team. We're missing one guy there, Jason Balsden, but very proud, quite frankly, to work with these people. They are absolutely natural salespeople, and every single one of them has a different investment niche specialty, which I'll get into later in the presentation. But what that allows us to do, I don't know if you guys know the saying, the riches are in the the riches are in the niches. So for us to focus and specialize, like in that photo from right to left, you have a private equity specialist, condo specialist, ADU specialist, right? Doing nothing but taking houses and adding mother-in-law suites, essentially.
Mm-hmm.
The guy in the middle that looks like the head of the Adams family is the area's number one salesman between 2-unit and 6-unit buildings.
Shout out to Steve. That's my realtor.
Steve Jarouche, yeah. He's done really well. And Greg Mayel has been with me for 17 years.
Wow.
And he does all our larger ICI properties, so income properties, commercial properties, industrial, but most of that is all income generating. So he takes care of a lot of the bigger corporate clients, the real estate income trusts, that sort of thing. So together, it's a small team by design where we just focus on being really, really good at income generating properties. And everybody in that picture are also investors.
Right on.
Yeah, so they
That's
don't.
important when you're choosing a realtor. Just for anybody who's listening, that like if your realtor is not an investor and you're looking for investments, then keep looking.
Yeah, thanks for saying that, Andrew, because it's a different mentality. When you're a residential salesperson, you got to think of them like Tasmanian devils, right? They'll or a wolf. They'll get the meal, right? They'll get the deer carcass and they'll just eat like great. And then they got to find the next deer carcass and they run off to get the next deer. And it's like that's not how investor real estate agents don't think that way. They think more like farmers. So they're going to plant seeds with you and help you grow your wealth, because if they know they make you wealthy faster, they'll get another commission faster. They don't have to run off and chase the next deer carcass. They can just focus on making you guys wealthy.
Well, that's 100% right too, because like if you think about it, somebody a residential like a standard homeowner realtor is going to sell somebody a house and they're not going to buy another house for 5 to 10 years.
Right.
Whereas, investment-minded realtor is counting on the fact that you're going to buy, like one a year at least, if not, a dozen a year. So.
And the whole thing is as well, and Andrew will know this, but these people see themselves as financial advisors for you for real estate. And if you think about, the rest of your life, you don't have 2 real estate lawyers. You don't have 3 financial advisors. You don't have 2 accountants, right? And I learned this. It's an old Jewish rule. It's a culture, like they've got some fantastic cultural rules to do with finance, right? And there's an old Jewish rule that to get wealthy, you have to have a great lawyer, a great accountant, and a great real estate agent.
Mm-hmm.
And I learned that from a couple of the old sort of gray hairs, you know what I mean? And they're absolutely right, because as soon as some investors think it's best to jump around, you'll lose them. You're not getting the steals from them. You're not getting the in-pocket listings from them. You're not getting the exclusive deals from them. Mm-hmm. That goes to their clients. You're not a client if you jump around, and you're not getting the deals and the steals. I'm sorry.
That's absolutely true. 100%.
And I learned that before I became a real estate agent. When I was in the University of Windsor, my real estate agent was Mike Mooney. He was a student rental specialist. He's retired now. He's still bouncing around. And Mike owned about 8 student rental properties. And I bought 2 good ones off of him, meat potatoes. But now I was his client. I'd already bought 2. He knew I was serious. And then when that steal came up, and it was the middle of an ice storm, he says, "Rhys, I know it's the middle of an ice storm, but I'm still going to pick you up in my caddy. Because if we can get there today and see it today, no one else is going today." Right?
Yeah.
And I was like, "Okay, Mike," I'm like 23 years old at the time, 24. And, I still remember the caddy bouncing off of the curb at about 5 kilometers an hour trying to get to this house. And yeah, it was a total steal. But he wasn't going to give that to me a year before when I didn't even own an income property yet. I wouldn't even have known what a steal is yet. But I had shown loyalty to him. He was my guy. Yeah, I was his client, and he gave me the steal when he knew I was ready for that steal. I know we're supposed to talk about Windsor, but I really hope that sort of advice helps some of the newer investors. Yeah.
Oh, it's totally true. You want a relationship oriented realtor rather than a transactional, and that's what's going to get you the deals in the future. And you have to develop that relationship with them in order for them to realize that you're a serious player. And when they do realize that, then the deals will come.
It's like
so why don't we move on? And you had some opportunities or some information to give.
I wanted to give a quick overview of the global, the national, and then the Windsor perspective, and then I can get into sort of the analytics from there, some of the charts and results, etc., from the Windsor Essex Real Estate Board. Sound good?
Yeah, our viewership tends to really like getting into those figures, so.
They do, eh?
They do.
I'm a sales guy. I want to tell stories. I don't want to go off the
we'll save it till the end. We'll tell more stories.
Gather around, kids. Grandpa Rhys has got a story for you. Yeah, no. I'll weave it all together. So current market landscape. Again, if I can offer any advice to the listening audience is really when it comes to making economic decisions, you've got to be a stoic. You got to get away from emotion, right? When you see a stock market crash or crypto crash, we all know from the media, we have a general sense that those are all emotional reactions to the stock market. They're emotional reactions to crypto, right? People get scared, they pull their money back out, right? I'm not saying rightly or wrongly, but what I'm saying is if you can pull away from that and be like Spock, right? You are way ahead of the game. So when you're looking at the global market landscape, who knows economics better than PhDs in economics? Call me crazy not listening to journalists. I'm going to listen to the PhDs in economics, right? Remember, and I'm not one of these anti-media guys. I think the media has a wonderful role to play getting information disseminated with journalistic integrity. But they also need to sell advertising dollars, which means that giving a little bit of fear to tune you in, to get you paying attention, is to their benefit. So if you're tuning into that fear and you're buying into that fear, that's not good for an investor. So The Economist magazine, that's sort of where I would start with your global perspective. So here I went with a quote from basically Export Development Canada, EDC. But their economic experts expect the global economy to grow by 4.1% in 2022 and 3.9% in 2023. And these numbers are end of first quarter, so they're March 31st, right? Inflation was already a problem. Oil was already over $100 a barrel. The war in the Ukraine was already going on. This is not this hasn't changed. This is what they expect, right? In a global perspective. The U.S. economy has been growing, and it's still predicted to grow strongly next year, right? Remember, when they're increasing interest rates at the bank, what are they doing? They're talking about, we gotta curb inflation. Inflation is part of growth. Essentially, we're growing too quickly, so they're trying to cool growth. They're not trying to kill growth. They're trying to slow it down, right? So, I will say this as well. When you talk about inflation is good for landlords because inflation is based on the consumer price index, right? 44% of the weight of the consumer price index is residential rents going up, right? Yeah. What business are we in? Landlording. What do we really like going up? Rents. We like that. So don't get caught up in all that. Just look and see sort of on a macro sense what's happening globally. Macro sense what's happening nationally. I'm going to get to that next. And then micro sense what's going on in the cities and the neighborhoods that you're focusing on investing. So nationally, in Canada, the Canadian economy will see continued strength in 2022, up 4.1%, moderating to 2.6% in 2023. And by the way, That 2.6% is number one in the G7. So of the major economic countries, quite frankly, even going into 2024, Canada is expected to be number one in GDP growth. A lot of the reason for that is, guys, we dig up a lot of rocks, we chop down a lot of trees, and we export it all.
Yeah.
Right. And what's going up like crazy in price right now is commodities, right? Including our oil from our oil sands. Yeah. City of Windsor. I think before I get into this, can you see that I added a second line to the title with asterisks? Be analytical and observational.
Yep.
So I know that the audience here loves the charts and the graphs. That's the analytical. There's nothing wrong with that. I was a double major undergrad science. I get it. I'm a numbers guy. But I've learned over the last 20 years in this business to also get observational. And there's some great rules of thumb observationally to really help you as a investor. So for now, before I get into the analytical with the charts right after this, I'm going to just go observational while I'm on this page, if that's okay, Andrew.
Yeah, I was just thinking to myself as you were saying that the numbers. When you're looking at a deal, you want to trust the numbers. When you're looking at the economy, those numbers that's already happened. And observational comes into play is like, what do I think is going to happen next? And that's very important.
You just nailed it. Lag measures and lead measures. So when we started off tracking for our clients, trying to help them plan out their investments over the next, I always go out about safely 3 years. After that, you're starting to flip coins a little bit. Nobody really knows. You can only guesstimate at that point. Mm-hmm. So we got really good at sort of predicting the next 3 years. And it's like right now, we're actually listing a whole bunch of properties coming up in the next couple of weeks from clients that I fought with 3-4 years ago. They wanted to sell their income properties back then. And I was like, no. So just wait. The prices are going up. What are you going to do with the money? Unless you're going to put it.
You just made some people hundreds of thousands of dollars.
Yeah. So one of the guys has been with me like 16, 17 years, and I've never heard him swear in my life. And he just, I won't say it because then Peter, our producer, is going to have to, hit the button so that it gets blocked anyway. But yes, he was very thankful with an F-bomb. Yeah, and he's a very conservative engineer. I've never heard him swear before, so that was pretty funny. But yes, but that's our job, man. Coming back to what we were saying before, our job is to generate wealth, not to make another commission. I'll get another commission from you at some point. You're a client. You're coming back to us. Mm-hmm. So it frees us up when we're not hungry for a commission to give the right advice to build up portfolios, right? So, okay, so coming back to Windsor here on the observational. I think everybody knows now we just built a $1.5 billion freeway. We're in the process of building a $4.1 billion international bridge. Our Stellantis plant is having a $2 billion makeover, which includes adding a third shift. And as soon as you add a third shift to 2,200 people, you got to understand, and most Windsorites don't even truly understand this. It's not just about the third shift in the Stellantis plant. It's the third shift that you now have to add to all the tool, die, and mold companies that support the Stellantis plant, and they're all local. Everybody's got to retool. Everybody's got to add a third shift. It's I figured it out as about 12,000 to 14,000 jobs.
So there's a lot of ripple effect.
Yeah, the guy that runs Workforce Windsor Essex is one of our clients, and I quickly sort of bounced those numbers, and he said, "Yeah, like we're guessing a very similar number." So. But then on top of that, you've now got the $6 billion battery plant, which is generational and transformational for the Windsor area. And you have to understand this when it comes to a battery plant. Battery plants hate transporting anything anywhere because of the breakage. These are fragile things. We're in the midst of being created. So they really, really want everything around them. The chemical plant, the battery casings plant, everything. They want everything close. They don't want to take it up to Toronto, 400 kilometers. They'll have too much breakage on the way in transportation. So that $6 billion battery plant, and to put it in context, that plant starts running in about a year and a half from now, 2 years from now. Yeah, just under 2 years from now. that plant will generate more battery power than all the battery power manufacturing capacity of the United States.
Wow.
That's how big it is. So these things are huge for Windsor, and lost in the sort of details. You guys probably don't even know we're also getting a 100,000 square foot R&D facility for batteries, 650 engineers. Let's say 500 of them buy what, $1 million houses each.
Yeah, I guess that makes sense if you're going to have a battery plant.
It's insane, and in the midst of all that, Amazon, because our logistics, by the way, our logistics industry is really growing down here as well, right? Trucking, etc. Amazon just announced they're moving to Windsor, and they're building like I think a 150,000 square foot facility, 300 jobs, and it was literally in the paper for one day because there's just so many announcements that are bigger than Amazon coming to town. Like, it's crazy. Right, and it's there's more to come. I was talking to the head of the WEDC, the Windsor Essex Development Commission, and they are absolutely, and I hate to use but the pedal to the metal. I was going to use another more ribald term. It has to do with family jewels and walls.
Yes.
Pedal to the metal, because Rhys is keeping this rated G, so your kids can watch it as well. But Stephen was saying basically that they're just full out right now trying to keep up with all the inquiries. We've had announcements subsequently for an $80 million plant for battery casing. So another South Korean company is coming to town to support the Stellantis LG battery plant. So I'm being very observational here. Look, you don't build a second international bridge, $4.1 billion. If you don't think the city's going to grow. And why I say that is it's the most international trade in the world of any route is between Detroit and Windsor. What they don't tell you is 62% of those trucks don't go more than 20 kilometers into Canada.
Oh, wow.
In other words, that international trade, almost 2/3 of it is Windsor trade. And they go back and forth across the border with the different parts and tools and dies and bolts, and that's what's going on. So if the federal government has decided to build a second bridge, it's because of their predictive models. Their predictive models have predicted over the next 20, 30 years, a ton of growth for Windsor, right? A ton of growth as well for the country. But I think you guys have seen, like, the provincial government right now is scrambling to bring more power lines down to Windsor because literally the predicted demand for power is going to over double in Windsor Essex over the next 5 years, literally double, right? Whereas the rest of the province is only going up a predicted 4.3%. We're literally over 100%.
It's interesting you should say that, because I have a friend in the sort of the power industry, and he was mentioning that it might be a good time to start buying up some farmland around Windsor because they'll need the infrastructure for the power, like battery plants and things like that.
Yeah, I think the lines have already been determined where they're going to run them. The reason I say that is I know Lakeshore, which is one of our bedroom communities, was complaining about where some of the lines were going, and the province basically said, "Tough nuts, we're in a rush." So you're not arguing this. Like, get out of here, NIMBYs. We're building a $6 billion plant. Scram.
Yeah. Well, so in a nutshell, we've got Windsor as primed position for some massive expansion for any investors that are, thinking of property and conversions and things like that.
Yeah, guys, I mean, I've evolved into private equity down here. So I'm bringing Real Estate Income Trust now to Windsor to joint venture with me. And I'm focused heavily on the downtown core of the city. So we're right now we're converting a bunch of old buildings, old office buildings. We're converting that old office space on, floors 2 and up. We're converting that all to residential. So we're adding about 200 beds to the downtown core, and it's a drop in the bucket. Like, we're going to be so crunched for real estate. I just hope that they, and I know this sounds right wing, it really isn't. It's just a pragmatic statement, but the housing crisis is 80% the fact that everything's quagmired at the bureaucratic level. So if you look at the red tape in 1970 versus now 50 years later, it's night and day. And by consequence, in 1970 in Canada, the United Kingdom, the United States, you could build housing twice as quickly per person as you can today. And what does Doug Ford say? We need to build housing twice as quickly.
Yeah.
What's in the way, man? You know, you got to strip the. And it's easy for a politician to follow the narrative. If you ever want to sell something on the people, you always bring it back to what it was historically. So all Dougie Ford has to say is we're going to bring those rules back to where they were in the 1970s, so we can build twice as many houses per cap. But they do. I don't know. I'm hoping that it gets done. It's supposed to. So, but that'll eliminate the housing crisis. Yeah. Yep. But until then, I'm dealing with the bureaucracy as a developer myself, and it's, oh my God, like they are.
Well, and that model of taking something that's underutilized, and I know that in the office space in downtown Windsor there hasn't been the need for it the same way as there might have been at one time, and converting it to residential is brilliant.
Oh, thank you. Yeah, I don't get accused of brilliance too much, Andrew. So yeah.
Well, and I the idea is not. I didn't say you were.
Andrew, you're my new wingman, man. I appreciate this. I always wanted my own hype man. This is great.
There you go. There you go.
Yeah, no, it's gone really well. I confused a lot of people when I brought a REIT down here to do that. I had more than one high net worth individual in Windsor ask me politely and almost sheepishly what private equity is. You know, and one guy owned over 50 properties. You know, the further you are from a financial center like Toronto, the more financially illiterate your population is. And that affords certain opportunities as well, especially if you get into sort of the private equity realm with Rhys Wyn Trenhaile on our team, for example. So, yeah, story for another day. So, yeah. Anyway,
so where are we going after this?
Yeah, I think I've gone over sort of the observational, right? There's tons of announcements. So this is the Windsor Essex County Association of Realtors, and these are the charts that we get on a monthly basis. I'm going to proffer some advice to the investors out there. Don't worry about changes month to month. Year over year is good. Is a lot better. You know, you're looking for longer term trends in the numbers, not knee-jerk reactions to policy and that sort of thing, right? So basically, as far as market activity goes, what that means in layman's terms here is essentially the number of listings available. And you'll see that the number of listings available have really jumped from about 1,000 to 1,400. I personally think that's a good thing, right? What that means is a couple things. Now that people aren't worried about the pandemic as much anymore, more people are listing their houses, right? Like my parents, for example, there's no way in a million years they would have listed their house for sale during the pandemic. You know, they're part of that group of older people that were just really scared of getting the virus. And actually, I'll talk about sort of how that affected the condo market when I talk about my teammate Sadie later on. So this is not a bad thing, guys, especially if you're in buyer mode as an investor. This is a great thing because the bidding wars have largely evaporated in Windsor now. You know, you might on occasion get into a bidding war with 2, 3, 4 buyers. I've heard as high as 8 in recent weeks, but it's becoming the way of the dodo. You're noticing now a lot more agents are putting right in the beginning of the descriptive on the listings listed at market value.
Yeah,
that's what they're putting in now, so that you guys know that it's not listed for a bidding war. We were forced as real estate agents to list a couple $100,000 under where we thought the price was going to land, because the market was so red hot that everybody just anticipated they'd be bidding against 12 other buyers, so that if we listed at about what we thought the property was worth, buyers were still thinking that the price was going to go way over that price, so they wouldn't bother. So we had to underlist. Oh, wow. Oh, yeah, it was horrible, man.
Well, yeah. You're right. It is almost a self-fulfilling prophecy, is that in the beginning it sort of started out that way as a strategy, and then it became that's just the way you list.
You couldn't list a house. If your job was to get as much money for the house as possible for the vendor, which is your fiduciary responsibility at that point. then you didn't have a choice. If you listed at close to what it was worth, you were doing your client a disservice because the net equity from the sale in their pocket would have been reduced.
Mm-hmm.
Right? So continuing with the charts, guys, market activity year to date. This is what I like seeing here is look at this creep up, right? This is cumulative, right? So this one plus this one plus the, but what I love is there's just more, there's more for sale. I love that. I love that. Balanced markets are the best markets. Yeah.
They really are. And from an investor perspective, you've got some more options, because I think that what was happening when there was all sorts of bidding wars and the prices were going up is, especially if you were a newer investor within the first couple of years, you may have bought something that you ordinarily wouldn't have because you just wanted to get into the market.
Right.
Whereas now you can actually just like pick and choose, or starting to be able to pick and choose that you actually want this property specifically. You have certain parameters, right?
Well, I can tell you, coming back to Steve Derouge, who does all our 2-unit to 6-unit buildings, he was starting to really get worried for the investors. Like, he was starting to come up against buildings that, that he would potentially be selling where there's low to no cash flow. And Steve was like, what do I do?
Someone's going to buy it because they want it, but it's not a good investment.
But yeah, Steve doesn't want to put clients into risky situations, right? So, I think we're very thankful and breathing a sigh of relief now that it's slowing down on the house price gains. The rents are still going to go up because, again, 44% of inflation is rent increase. So we're going to be able to maintain cash flowing properties in Windsor. That's why you come to Windsor, right? If you want cash flow, this is the best city to do it. Best major city in Ontario. Yeah, without a doubt. So sales, you can see that we've had a huge drop here, right? From 733 year over year to 583. You might go, oh my God, that's nuts. And what I pointed out to Andrew before we got on here today, 733 was the busiest May in the history of Windsor Essex. The second busiest May in the history of Windsor Essex is this one. This is how crazy that number is that number is so far down, it's still number 2 in the history of the city. So yes, it's still a good, robust market. Yeah, the other benefit of living in Windsor is you're right next to Detroit. So within 15, 20 minutes, you're at all the big concerts. So we got to see all, even today, right? We get to see all the major acts as they come through town. It's great. Unfortunately, I'm a Detroit Lions fan. That's the drawback to living next to Detroit. Yeah, but it's all fun. It's all fun until you get to the actual game. The tailgates are great. So to get off that tangent, sales year to date.
Real estate.
Real estate. I know. I have to talk about it sometimes. Sales year to date, the sales are down about 5% over the course of the year. It is what it is, guys. It's still the second busiest market through May in the history of the city. And you've seen the observational. I don't see it crashing. We look. I failed to put this into the presentation. I really should. I really should have. I really wish when they're listing the reasons for the housing crisis and the housing prices going up, I really wish they could adjust the font size relative to the issue, because supply and demand would be like a 50 font. And then inflation and Putin's war and oil prices, they'd all be 12 font.
Yeah.
Guys, this is macroeconomics. It's supply and demand, and we have a ton of demand for housing. You can see the future demand from the observational I was just going through for this city. We don't have the supply. We're still quagmired and bottlenecked getting building permits, right? And I don't blame the local bureaucracy, by the way. It's really a provincial issue. The province has to cut the regulations under the Building Code Act. They have to cut those regulations back down, or we're screwed. The feds are waiting for money. Basically, the feds are saying, well, once municipalities can show us how they're going to speed things up through a deregulation, they'll write the checks to the municipalities directly to hire more bureaucrats to process, but they're not going to just give the money while the problem still exists. They're not going to throw money at a bad problem. You better show us how you're going to solve that problem first. So it's all lining up. Dougie Ford's just got to do his job and cut the red tape, and we'll be okay with the housing crisis. But they better hurry up. It's creating socioeconomic gaps like crazy. We're going to get people storming Capitol Hill in no time. I mean, it's.
And I'm glad you said that about, you know, the 50 font supply and demand things, because I have that conversation on the daily, and people, you know, having some uncertainty, you know, what's going to happen, is the market going to go down? And there's a lot of triggers that the government is trying to pull right now to control things a little bit, and I don't necessarily disagree with some of it, but the core issue that you've said, that's it. It's supply and demand, right?
You can't build fast enough. You have builders that want to build, you have developers that want to develop, you have buyers that want to buy. So where's the problem, right? And unfortunately, it's been a little bit of smoke and mirrors. We haven't had. We could do with a lot more people in the construction down here. Don't get me wrong, but we don't have projects sitting there because we don't have enough labor. That's not what's happening, right? We have a bureaucratic problem where we can't get the building permits fast enough. So I think I've gone over the main things. I mean, the average price again, year to date, it's up 27%. So even though it dropped 14% in May, which you can see at the top of the screen, right? It's a huge drop, but you're still up 27%.
Yeah.
So this is why I talk in terms of, you know, don't listen to the media too much, because they'll focus on that last month and they'll go, oh my God, it's a crash. It's like, it's not a crash. Look at it year over year. It was a correction, right? And it's a good correction. You can't have prices go that fast. Look, the Canadian historical average is 5% a year since 1867, Confederation. It's almost a straight line with a couple little dents for the global meltdown and for the Great Depression, but it's a straight line. So when you go this high over that historical average, I just don't think it's good long-term, man.
No, you're on pace to having a house cost $2 million in 5 years. Like,
yeah, oh yeah. I just wanted to quickly show this just for like almost humor, but boy, can you tell Windsor's a middle-class town?
Right in the middle there.
Look at all those sales on the last graph.
Yeah.
They're all jammed together. So yeah. Anyway, that was what I wanted to show.
That's also what makes it a great investment area, because it's a lot of, you know, average, like those are the houses that you can buy as an investor and rent, or I guess as a flipper, you could sell them to people as well. But when you're too diversified with luxury houses, and I mean, there's some lower end areas as well, like any city, but that's a strong signal, because that's the sweet spot, right? Like,
yeah. No, you and I are preaching from the same pulpit, which is refreshing. You and I have gone over most of this already, but first line, next 10 years, first line, there's never been a recession coming out of a plague in the history of the world. Two reasons for that. One is because you know, basically when you take away something like they call it the pandemic, it's a plague. They just don't want to scare people, so they gave it a different name. It was a plague. And so coming out of the plague, your economy rebounds because everybody's more free to do things like travel and get stuck in traffic at Pearson Airport, or right now we're letting all the unvaccinated back into the game, right? And it's like, you know, everybody's able to do everything again. Mm-hmm. And so that's an economy boost, right? I already said the G7, out of the G7 countries, Canada's the lead for the next 3 years. I do believe that even though the government is being woefully slow to respond, especially the provincial government, they are on the way to fix immigration and building codes. So immigration, I don't know if people know this or not, but you have to score out of 2 out of 3 things to get into Canada. You got to have a lot of money, speak one of the official languages, or have a skill that we need. If you have 2 of those 3, welcome to Canada. We want you, right? It's a great system. They're tweaking it now, interestingly enough, though, where they're putting more weight on skills. So, for example, they're going to target construction workers like crazy.
Right.
So when you're bringing in 400,000 immigrants a year, I bet you 50 to 100,000 of them are going to be carpenters and roofers and all kinds of things from foreign countries. I guarantee it.
So come to Canada, build your own house, and you can stay.
Hey, man. So we're going that way, which is great, and as a son of immigrants, come on in, man. Windsor's the second most ethnically diverse city in Canada behind Toronto. It's the United Nations down here. We're one of the centers where all the immigrants come. So when you're talking about those builders, a lot of them are going to land in Windsor. They're not going to just eventually get here. They're going to land here.
We're going to build the factories for all this stuff you were talking about.
And yeah, we're going to have a lot of them coming in. And I've said Windsor's already insanely well poised for economic growth through the infrastructure that we're building, like the freeways and the $2 billion hospital. Didn't even mention that. The $4 billion bridge. It's insane, man. I just wanted to quickly go through what a few of my teammates do before we wrap it up. So this is Stephanie Saunders. She does residential homes for us, but specifically as an investor, she also does residential homes where you add an additional dwelling unit. And she has some independent individual investors, and actually, funnily enough, she has a few syndicates that all buy these houses one at a time. And then again, because we're investors down here, we have the extended power team of tradespeople you need, property managers you need, contractors you need to get the job done without screwing you over, right? So it's not just about us, it's about our extended teams as investors ourselves, right? Sadie Morrow, nobody sells more high-rise condos in established buildings than her. Most years, I don't know if she did it last year or not. We haven't measured it yet. But I wanted to quickly say with condos down here are based on three demographics: young professionals, what I call professional students, and retirees. And those students have not been in Windsor because of the plague. They've been at home. They're now coming back again. They're going to start filling those condos up again and driving demand again. Retirees would not, even though they couldn't navigate the stairs anymore, and we get a ton of clients like this, they still wouldn't sell their houses during the pandemic because they don't want to catch COVID in an elevator. They've always been in a single detached home, right? So, nice comment, Andrew. Yeah. I got to wrap this up. But anyway, I do feel that condos down here are going to really jump in price. So it's something to look at, guys, as the plague lifts. So I would talk to Sadie if you're at all interested. You can still cash flow the condo down here. Steve Girouge, #1 in Windsor for 2 to 6 units, duplex to sixplex. I don't have to say any more than that. Andrew uses them, full stop, boom. And he's a hell of an investor too. All of them are, but he's really established.
He's got the pose.
Yeah, and he's got the lean. There's the lean, and that in a classic real estate sense, that photo's probably 15 years old too. And then Greg Mael, he's been with me 17 years. He does all our big apartment buildings. Most of his sales you will never see on the MLS. They're virtually all exclusive. He just sold a 38-unit building to a real estate income trust, but he'd be more than happy to sell a 20, 25, 30, 35-unit building. We got a group out of Montreal that's buying a 24-unit off of him right now, not on the MLS. So Sweet. That's Greg. He's quiet, he's slow, and just methodical, and just gets it done, man. And that's it. Tutto finito.
And that's how we get in touch with you.
I'll leave it there.
Now, anybody who found Rhys to be a wealth of knowledge, write this information down, take a screenshot, take a picture. These are the best ways? Do you have any social media that you want people to follow or anything like that?
Oh, man. I should have had this up here, shouldn't I? But yeah, why don't we link down below, because it's going to be on YouTube, right?
Yeah.
So if Peter can just link down below, he's already got all my my social media stuff. Like we run
we'll take care of that. We'll stick that all
we run
there.
A really active real estate investment group, and we post all of our exclusive listings in there.
Perfect.
Yeah, so it does open it up to everybody. Yeah.
So thank you very much, Rhys. This was a wealth of information, and I like the observational. That's, I think, important, not just the numbers, but sort of projecting out the future. So thank you. And as a viewer, if you liked what you heard, please remember to subscribe, click the like, notifications, all that good stuff. And if you want to find me, your host is with the most, Andrew Cox on Facebook and Andrew Cox REI on Instagram and everywhere else. So thanks for coming and joining us today. And See you next time.
Thanks a lot, guys.